Let me get some admin issues out of the way before we get started with our question and answer portion. We are recording this webinar. We will have an audio recording available shortly after the event. Also, we will have a full transcript available to everyone. That will take us a few more weeks to get it out to you, but we'll make sure to share it, put it on the blog, share it via social media, and share it with all of our panelists too. Also, if you have any questions as you are listening to our presenters, to our panelists, if you have any questions that come to mind, please make sure you ask them using the GoToWebinar control panel. I'll be moderating this event, so I'll try to incorporate those into the discussion. So if you have any questions, make sure to plop them in there, and I'll make sure to get to them. So without further ado, I am going to ask each one of our panelists to introduce themselves, and then we'll get started. We have 9 questions today, so we have plenty of material to cover. So Dr. Kumar, please, brief introduction.
Hi all of you there. I hope you can hear me. As Matthew just said, my name is AJ. I work at the University of Dubai. Basically, I teach financial crimes. That's what I teach here at the moment. And I'm a lawyer both in India and in the UK. Previously, I worked for some of the universities in the UK and just moved to Dubai last year.
Excellent. Thank you, Dr. Kumar. Dr. Magyar, Csaba.
Hello, everyone. My name is Csaba Magyar, and I live in Budapest, Hungary. I'm a lawyer and a tax consultant, and I'm the vice chair of the Association of Hungarian Tax Experts. And next to this, I'm the managing director of Crystal Worldwide, and I specialize into international tax planning, fiduciary services, and actually I'm trying to represent the part regarding the experience in the field of practical issues during tax planning and things like that. And I hope that during this webinar we will be able to sort out some issues regarding tax sovereignty.
Excellent. Thank you, Csaba. And Dr. Palin, brief introduction.
Thank you very much. My name is Ronen Palin. I'm a professor of international political economy at City University in London. And not everybody is familiar with international political economy. It's a subfield of political science, which means that compared to my colleagues here and compared to others, I'm an expert in generalities, not in anything specific. No, I'm not a lawyer, not an accountant. I wrote a few books and few books on offshore tax havens, so I'm broadly familiar with the subject, but mostly from a political science perspective.
Excellent. Thank you very much. Thank you very much, gentlemen.
Importantly, Roman speaks Hungarian as well, at least a little
There
bit.
you go. Excellent. Okay. Thank you very much for your introductions. Let's get started with a very kind of general question, one that will look more specific. I guess we'll look at definitions and like what is the role of tax sovereignty. So the first question we have from our members is, what is tax sovereignty? What is the functional role of sovereignty in taxation? And why is tax sovereignty important? Csaba, since you suggested this webinar to us and you're going to be in our future conference as a panelist on this, why don't you get us started with that one?
So actually, according to my approach, tax sovereignty is a pretty important question nowadays, because according to the achievements regarding 2017 and 18, I could see that the tax sovereignty of European countries are on a lower level because of OECD and different European directives. And sometimes this kind of coordination and this kind of influence, which cannot leave countries to make their own tax policy, can be harmful as well. Of course, it must be highlighted that there are a lot of advantages, because to have common concept of taxation, it is a pretty important factor, but sometimes, as I can see, there are a lot of harmful practice in the field of tax coordination and international cooperation international cooperation in tax matters, because they do not pay attention to the tax sovereignty of many countries. And from this perspective, it must be highlighted that there are a lot of third countries, I mean non-European countries, which are also influenced by this practice, and sometimes they cannot determine their own tax policy because of OECD and European countries. And I think in the future it will be a very important issue to find a balance between influencing and convincing other countries to follow the best tax policy and to reserve their tax sovereignty as well.
Excellent, thank you, Csaba. AJ, any additional comments or reactions to what Csaba said?
Yeah, I mean, picking up on what he said, I mean, certainly, I mean, with the OECD taking a lead in terms of BEPS and all of those things happening, I think there's I wouldn't want to call it cooperation in any way, but you're looking at it from an international law perspective. I mean, most of the nations, excepting those few ones which have the voice or the muscle to influence those kind of decisions, most of the other voices have been are silent in terms of international tax policy creation, and that is the core, I think, in terms of tax sovereignty, because as we know that, I mean, tax is something which is linked to the sovereign power of any nation, and that is being bartered away by in no small way through these kind of organized policy making. So
Thank you.
I mean,
Ronan?
Yes, I think I have a very different views, particularly from to Csaba, and let me try to articulate them. It will be fun, I think, because we have different views on it. First of all, there's no such a thing as tax sovereignty. I mean, the concept doesn't mean to me anything. I understand the concept of state sovereignty. States have a sovereignty, which one aspect or one important aspect of state sovereignty is the right to write their own laws, which applies to their own territories. And one aspect of that law is taxation and regulation. Okay, so tax sovereignty, the question about tax sovereignty as such, strictly speaking, maybe I'm being pedantic, doesn't make sense to me. There's no such a thing. It's only about, we're talking about state sovereignty. Now, tax is used for various goals. It's used to fund public services, and there's a debate about to what extent it's needed and so on and so forth. But of course, it's also used for other social goals like redistribution, or used as leverage by governments to achieve certain prescribed goals, incentivize people or corporations to do. So tax is a very important tool in the organization of states, and that's why it's so significant. And without having the ability to write your own laws in tax, states effectively may have the de jure sovereignty, but not de facto sovereignty. I accept that. Now, what the question refers to Europe. What happens is two things with regard to tax. When you join a club, you give up some of rights over taxation, for example, the WTO, or in the case of Europe, a European organization. There are various goals which seems to be contradicting to one another. One, the goal, for example, of creating a single market may affect the right to all kind of rules and regulation which affect the competitiveness of companies and individuals, including taxation. So the limitation that people, I think, refers to in the case of Europe, we're talking about basically joining the club. By joining a club, and there are limitations also with the WTO. Then there are the second issue, and that's the spillover effect. Okay, with there are tax regime that may be intentionally or intended, either directly or indirectly, to attract non-resident and may affect other countries. Countries may feel that they are being impacted as a spillover because of the tax rules of one country. And countries can respond by different ways. They can respond by putting pressure on those countries. They can respond, and that's the thing what we are talking about. The kind of the politics of that. But fundamentally, there's no such a thing as tax sovereignty. There's a state sovereignty, and the sovereignty of states means the right to write the law, including your the menu or the type of taxation that you want to apply.
Thank you, Ronan.
So
any reactions to that from either of you, Chava or AJ?
Yes,
you know, the term tax sovereignty is coming from Matteo, so he was the person who found out. But actually, I agree with you regarding the state sovereignty and tax sovereignty. But we need to find the proper words to express what's going on. And nowadays, we could fear that sometimes countries were not able to prepare their own law in the field of taxation because of being in a club. And of course, it is always important to pay the necessary fee for the club, for the membership. But sometimes it is good to calculate the price.
AJ, anything to add?
It isn't expensive, or did I receive enough services regarding this? So that's my approach to this question.
AJ?
Yeah, I mean, to pick up on what Ronan said. In terms of tax sovereignty, you might have had it as tax and sovereignty.
I didn't get it.
Sorry?
I didn't get which sovereignty you're referring to. I didn't get
I'm just saying, understanding tax sovereignty. We could have said it as tax and sovereignty, because at the moment, in terms of which you said, there's no concept as tax sovereignty. I could accept that, but in terms of tax laws, the sovereignty is being diminished. I think there's no two questions about that.
No, I disagree. I disagree profoundly on that. I believe, yes, as I said, remember, we will go to it later with the rest question, because it will become clear. Being a member of the club has implications, but the sovereign can decide to be a member or not of that particular club, okay? And that's where sovereignty lies. If the sovereign is not able to join the club, or not able to decline to leave the club, then they lose sovereignty. Once they are part of the club, the sovereign can make a decision to what extent they are prepared to accept the club rules. And that's the question. So that's a separate question. It's not about tax sovereignty. It's about calculation of what is the best position, developmental rules or other, that states would like to achieve. So it's nothing to do with sovereignty as far as I'm concerned.
Excellent. Thank you. Okay, so with that introduction, I think now we could get into, I guess, the meatier portion of the webinar. We'll look at more of the what sort of policies in Europe and or pushed by the OECD, and what sort of impact they have on tax legislation and I guess state sovereignty with regards to tax for certain jurisdictions, if we want to rephrase it that way. So the second question, okay, now looking at what are the positive and negative aspects, so both the plus and the minuses, of the impact of the United States, the OECD, and the European Union on the tax legislation of third countries? Now we're looking at countries that are not members of the OECD, that are not members of the European Union, that are not part of the United States. So AJ, you want to get a start with that? What are some of the positive and negative aspects?
Linking it back to the previous question. In terms of the club, understanding tax sovereignty, within Europe and outside, as the question says, from an outsider's perspective, the kind of, although you say that the sovereign has the right to decide whether he wants to join the club, but that right is being, I think, still being diminished in a way by the permutations and combinations by the biggest economies. Basically, as you can see, the US can decide whether it wants to be inside or outside, and it can go ahead with its own laws. So I think, I mean, there are positives in a sense. I mean, the things that they do unilaterally have in due course become the norm later on, right? Which, I mean, so in that sense, and because it's a big economy, and but at the end of it, I think, I mean, whether it is the OECD, whether it is the EU, I think, I mean, from an outside that club, I think we all stand to, not gain from that.
Ronan, reactions
okay,
there?
Again, I'll sound a bit pedantic in my answer, but we have to differentiate the OECD, which is really a think tank that cannot impose any policy, but can advise, and the best it can achieve, therefore, is something like blacklisting, i.e., you are on the list. That's not a policy, yes? That's what you achieve, as opposed to the policies of the United States, which is a sovereign country, and of course the European Union, which is, I think, more the club of states. The answer to the question is very difficult for me to answer, a straight answer, because my sense is broadly that the international tax regime, if we can call it, is not functioning that well. It's not functioning that well in terms of, say, economic efficiency, justice, and so on and so forth, and particularly in the case of corporations. So the results at the moment are not a well-functioning system to my mind. And to my mind, the institutions that can change that are most likely to be able to change it are three of the largest economies in the world: the United States, the European Union, and China. So this particular logic suggests to me that their impact is not as yet as positive as I would like it to be. Broadly speaking, the way they can operate is very differently. Again, coming back to my notion of sovereignty, the way do you hear me?
Yes, you can.
The way the United States is operating is essentially using its large market. The United States is taking a series of unilateral positions, particularly on FATCA, in which it says, you know what, whatever the rules you want to have in any country you want, if you want to deal with an American citizen corporation in our economy, you have to follow our rules. So in a sense, United States use its market power to force others. It doesn't force other countries. It forces companies and individuals, but countries have to play with it. Okay, the European Union may go in that direction as well, and I think may use its market power. Broadly, I think when the United States did it, it had broadly a positive effect in the direction that I would like to see. Broadly, but it's very broadly. Like I think, I don't think we have sufficient time to begin to disentangle various things that the United States is doing and using its market power in a way that I'm not entirely happy with. The European Union has a particular problem in externalizing its policy. It's internally highly divided. The European Union has few tax havens, some of the biggest in the world. I would say Netherlands is, it's not the biggest. And in fact, the president of the European Union, Mr. Juncker, well, so the European Union is highly divided, and that affects its policy. But broadly, the policies are positive, but we are far from having, I think, a well-functioning international tax regime. That would be my position.
Chava, any reactions to that?
Yes, before answering the question, I wanted to ask Ronan regarding the disadvantages, because you mentioned in the beginning that sometimes this system has some difficulties regarding the functioning and how it works in practice. What do you think? What do you see? What are the biggest problems nowadays? What are the issues?
Well, if you want to think strictly from an economic perspective, the fact that Cayman Island is the 5th largest financial center in the world doesn't really make sense, okay? You can't explain it by normal economic rationale. The rise of these particular financial centers, this means that there's some sort of inefficiency in the system that are being, let's say, resolved here. So that's one. The second aspect that it's very much linked to it is the problem that we are all aware of, at least I hope that we are aware of, and that's with globalization, we have seen a huge increase in the gap between rich and poor. And that has been a very significant problem worldwide. I think we reached a position, I can't remember the figure, that about 13 or 14 billionaire in the world owns more like equivalent of 50% of the rest of the world, or something like that. I mean, we're talking about a ridiculous number, which I don't, maybe there was, I'm not Mr. Trump, who always talk about history, he doesn't know history, but, you know, I don't know if that's, and that's not a justifiable, that's just not economically useful system and so on and so forth. So we have a problem. And I think the international tax regime, let's call it that way, is certainly a key aspect of that problem.
Csaba, your reactions?
Yeah, and actually, I think that this problem could be solved, but to solve this issue, we should think together. We are the world, we are the children, so all of the countries should follow the same tax policy and tax regulation to find a proper way, because until OECD countries, European countries are following, or at least they are trying to follow the same tax regulations, and there are other countries who do not follow this kind of regulations, there will be always tax havens and different loopholes. But unfortunately, as you mentioned before, even in the European countries, there are different countries who cannot follow the same way regarding tax policy, and also in other fields as well. So it means that the system cannot work if there is no agreement among all of the countries. So it is a hard issue, and we should have a so-called global tax system to sort this out, but until then there is a low chance that there will be a good solution which is good for everyone, which is good for the big countries, for the big players, and which is good for the small countries as well.
Linking it to this idea of the global tax system that you just mentioned, Csaba, we have a question here, I guess at a more regional level, in terms of the Common Consolidated Corporate Tax Base, the CCCTB in Europe. What is the approach of the smaller EU member states to the CCCTB? Csaba, you want to get us started with that one, which kind of links to this idea of a global tax system, but at a more regional level, I guess.
You know, I cannot represent all of the small countries in Europe, and I'm not authorized to represent Hungary regarding this question. I can share with you my opinion regarding this topic, but as
these are all opinions
from professionals, the small countries are afraid of this new system, because this can bring us closer a little bit to the so-called global taxation. So it means that at least we could have some kind of common European tax system. But according to some professionals, there is no calculation or proper calculation about the effects of this kind of common tax base in the European Union. But we will see. So actually I'm not against, but there is a lot of questions. And I wanted to say in connection with the previous question that there are a lot of negative aspects as well. And tax professionals are afraid of more administration. And we are afraid of having more work. I'm not against more work, of course, but I'm against administration. So this global system, or at least the European system, is trying to lead us to have a huge amount of administration during our everyday work. So it would be great to find out a system which can work. Everybody could follow this system, but with less administration.
Got it, Csaba. AJ, any comments on CCCTB or this additional work that comes from you know, all these new compliance and so forth?
Not really. I mean, but I just wanted to pick up on the. I mean, I just had a thought. I mean, probably to just ask as well. In terms of the global agreement that you're saying, do you think that, I mean, that is going to get rid of all the inequality that Ronan was alluding to earlier?
guess that question is for Csaba in terms of the global, or for Ronen.
Yes, but I couldn't understand the end of your question.
The global agreement that you're trying to say, which could solve the issues. I mean, to me personally, that is actually cutting out the competition there. But in terms of inequality that Ronen was alluding to earlier, do you think that is going to help in that? I mean, I'm just asking Ronen as well.
It's a big question. There is a discussion about setting up an international tax organization. Tanzi was speaking of for the last 30 or 40 years, which will be broadly on the same kind of model of the WTO. It will have some sort of legislative powers. Okay, and there's an argument made for that. I haven't seen much progress. I'm afraid I'm more cynical than Csaba about coming to an agreement. I think agreement is possible, but you only need agreement between 3 in the world today. If there will be agreement with the United States, European Union, and China, the rest will simply follow through. So actually, you don't need to agree with everyone. These 3 have to agree on international tax regime. At the moment, they don't agree. I agree that if they agree, it doesn't mean necessarily that the agreement will be just and equitable to everyone. That's a high probability, but I think we are very far from that. But there is a recognition. I think there's increasing recognition by organizations like the OECD, like UNCTAD, and the IMF that something is fundamentally wrong with the current international tax regime. And in fact, the whole process that we're talking about, the regulatory process that we've seen taking place last 20 years, started from the G7. It was the G7 1996 that asked the OECD to come up with some sort of idea about how to deal with what was called at the time harmful tax competition. So I think there's a recognition at the global level from the G7 that there is a problem. How to solve the problem, I don't have the answers. Maybe next year I will. But at the moment I don't. I think it's a very big question. That's where we are. With regard to specifically to CCTB, okay, I see it more in the context of the European single market. When you try to set up a single market, there are various aspects to such a single market that can be derailed, and we see the same in the United States. As you know, in the United States, you've got 50 states. Then you've got Delaware and Nevada. There are competition between states, and that's a problem. That undermines the legitimacy of the single market and so on and so forth. So my understanding that what CCTB is basically about, and I do recognize that application is maybe different from principle. But in principle, what's about? It's about sustaining the single market. So if you have a single market, then on the one hand, you want to reduce the costs for corporation, the cost that you're talking about, cost of reporting and so on and so forth. Just imagine that in the UK, you've got, I don't know, about 60 or 70 different regions. Each corporation, so each company will have to write the reports from each region. Here, the same in Europe. If you're a single market, you try to reduce cost. You try to avoid various forms of subsidies, which will undermine the legitimacy of the market, which can happen in competition between states within that. And I think some of the smaller states, and that's what I think Csaba was alluding to, some of the smaller states in Europe may basically become internal tax havens, the way Delaware and Nevada and Vermont in the United States. So you try to avoid that. So that's the second one. You're trying to avoid this gaming, but fundamentally the CCTB is really about the single market, to try to create, it's another element to sustain the single markets. Now it has a tax, of course, implication, but that's what it's about.
Excellent. Any reactions to that, Csaba, AJ?
And actually, AJ used a very important word, which was competition. So I think it's a pretty important question whether competition is good or not in the case of tax matters. Because this can be a question. Competition between European member states in a single market. So it still exists. And even if there will be a common consolidated European tax base, it will not harmonize the corporate tax rate, for example. So in Hungary, the corporate tax rate is just 9%. And I can tell you a few other countries where it is much higher. So it means that it will solve again only one aspect of this issue. We can be happy that so we made one more step to get closer to the common European tax system, but as I can see now,
since in Hungary the corporate tax rate is 9%, and say in UK it's a low 21%, do you see a huge inflow of UK companies moving to Hungary?
No, actually, I cannot see. You are right with this.
So,
but,
what is this competition about in Hungary? Then it's 9%. I mean, how many companies from Europe, from Germany, from France, serious company, either serious company, large one, or actually new startups? How many of them decide to move to Hungary specifically because of the lower corporate taxation?
So we do not have a specific calculation about this. I could see.
You may have some.
I could only see when the corporate tax rate in Hungary was decreased to 9%. We received a lot of requests from foreigners that they were interested in moving their business to Hungary. And we excuse me?
Moving their businesses meant what? From which countries, if you know? And what did they mean by moving their businesses?
So actually, we received a lot of requests from Russian people because they wanted to change their old-fashioned scheme in Cyprus, to Hungary. So they are tax planners. That's the story. But we have some big companies in Hungary as well, like Audi or Mercedes. So I think that they are not against this 9% corporate tax rate in Hungary. So I didn't assist them to come to Hungary, but I think this could be one more reason for them to stay in Hungary. And there were a few shared service centers which moved to Hungary from Poland, from Germany, and from other countries as well. I cannot tell you that a huge amount of companies went to Hungary because of the 9% corporate tax rate, but there were some achievements.
Okay, I will dispute. All right. Okay, shall I respond to that? Because I don't know. That's
of course, we are having a conversation.
We're having a discussion.
There's economist notion of tax competition, because economists believe that competition is good, and that means those economists, of course, don't work in business. Because if you work in business, the last thing you want is competition. In a very competitive world, you don't make money. But if you're in university, you can talk about competition and you'll be supported by businesses to say that. The reality is, I think there is serious foreign direct investment into countries like Hungary or the Czech Republic or Slovakia by, for example, car manufacturers. But it will be a much more solid investment, of course, if it's not based purely or even primarily on tax, but based on other aspects of those countries, infrastructure, human capital, and so on and so forth. Okay, so that will be much more significant than tax competition, in my view. And it could be, although I did make a calculation, that tax competition attracts precisely the wrong businesses who come for the wrong reasons quite often. And you mentioned Russian trying to move from Cyprus. Well, Matteo, you may tell us about the great success of Cyprus in attracting Russian capital. I think you are now living in Cyprus, and it's, of course, the party is still on, isn't it?
Oh, yeah, it's definitely on. If you just go to Limassol, you'll see that it's 50% of it is actually Russian.
Yes, but Cyprus is in a profound financial crisis, which is now recovering slowly.
It's recovering. It's recovering, and it's actually improved significantly since 2013.
Yeah, but believe me, I will not recommend. I don't know if you, Matteo, recommend what Cyprus had to go through to others like Hungary or Czech Republic or any other considered small states. And that was a developmental model that was based on attracting mobile capital, particularly tax evaders, avoiders, and money laundering. That was the model. That was the primary model of Cyprus. And for a while, Cyprus could show enormous economic growth on the face of it. At Cyprus, I think Cyprus, Matteo, you'll know better. Cyprus GDP per capita probably reached near Britain. So
I'm not aware of the statistics. I wouldn't be able to tell you.
Yes, but it was, you know, I mean, the real estate market was booming in Cyprus, and so on and so forth. So this is the effect of so-called tax competition. Okay, you're attracting the wrong type of businesses, and when it turns against you, which can happen easily, these countries are in a very difficult position. So I will not advocate it as a policy.
Yes, but actually, I think that the UK was also involved into this tax competition, because there are a lot of Russian investors who went to the UK. They set up share companies and similar structures.
Absolutely, you're absolutely right. What they set up, there was a kind of a recent research into what is the net positive impact of the Russian investment, and they could find very little. Besides the fact that whole areas in London, not only Russians, but other very wealthy people from various countries using whole areas in London as essentially capital investment. So central London has become empty. It's not a residential. But when economists try to calculate what is the net value of this investment, they found very little, if anything.
AJ, any want to chip in with a thought or two here?
But I mean, there are two things which I just wanted to think. I mean, which I think, and especially in a place like Dubai. I mean, to go by what Ronan said. I mean, what is the real impact? I mean, that this can make. I mean, the first thing is, I mean, I think in terms of the topic which we have in terms of sovereignty, I think they should have the leeway to deal with it the way they want. One. The second thing is, of course, I mean, if you are having a jurisdiction which is quite well versed in terms of the legal system, in terms of the human capital and all of those things, I mean, yeah, tax doesn't play a role. But for the others to really have an impact, I mean, in terms of attracting whatever might be the capital, I think the capital always has a spillover effect, and especially in a place like Dubai, which I visited 15 years ago, and to be coming back, and there's not an inch of space which has not been touched by whatever might be the capital that has flown in. Now, even if you're looking at Mauritius, now, I mean, of course, these are all small states, but that's probably the only country which has had, I mean, positive GDP growth in the last 40 years. I mean, consistently every single 40 years, you know. So although, I mean, there is this whole idea that, I mean, there is good money that, I mean, that's the only thing that is going to really bring in economic development or really changes as such. I'm a bit skeptical on that one.
And AJ, how do you see if there is a foreign investor who would like to set up a business in Dubai, let's say, and is it an important factor that there is no corporate tax at all? So if this guy can decide that I would like to go to Dubai to set up my business or into other countries, can it be an important factor that you do not have a corporate tax rate in the Emirates at all?
At least, I mean, for some of the Indian pharmaceutical companies which are based here, I find that as a very real thing for them to set base here. They buy, they own their IPs here, and most of these things are done from here.
Can you mention to me a company that does it?
Sun Pharma.
Sun Pharma. How many people they have working worldwide?
It's a multinational. I think. I mean, it's based. I mean, it has a lot of business in. I can't give you the exact figures, but I can get it for you if you want to. It's a big one in India, and it has a lot of business in the US as well.
Sure. And how many people are now employed in Dubai? I mean, how many jobs like research and development?
Probably around 20%.
20% or 20%?
20%.
There are 20%. There are actually labs in Dubai now.
They're setting up the lab. They're setting up the labs now.
Okay. So there'll be 20%, yes?
Yeah.
And what will be the effect on India?
No. I mean, in terms of all the IP activities, I mean, or the things which they all own it here. I mean, so that they don't necessarily have to own it in India, for which they will be taxed and all those things.
Yeah, it's good for them, huh?
It is.
But there's also some people in India.
Huh?
What about them?
But the thing, yeah, I mean, the point I wanted to, you have a point. All I was trying to say is that, I mean, they should be allowed to compete in this way.
Well, but
because
maybe,
even if you don't,
maybe India will come to the conclusion that Dubai is taking jobs or taking income tax from India and will basically block it. I mean, just think few steps ahead rather than think from the specific. At this point, it may be attractive to one particular company, but the effect of that is precisely something that, again, I don't agree with Trump, but this is his base. The effect of these things, when you think ahead, is that large economies will begin to develop a protectionist measures. That's what will happen. Okay, really. So everything will have an effect. Anyway.
Okay. Excellent. Let's shift gears a little bit more here, and let's talk a bit about BEPS, the OECD BEPS, base erosion profit shifting. Does BEPS serve the tax policy of all participating states? Has the OECD made any estimation regarding the effect of BEPS on state budgets? Csaba, we'll get us started there.
So actually, in the European Union, we have this anti-avoidance directive, and actually the BEPS is included in the system, and we don't know what will be the outcome of this story. We have already implemented a lot of regulation based on BEPS, but I think that there will be some negative aspects as well. For example, this new royalty regime and the Nexus rule. So there were a lot of European tax haven which were specialized into IP companies, and of course the state budget of these countries was based on these IP companies. They didn't pay too much taxes in that countries, but due to this new regulation, they might move to other countries outside the European Union. We don't know, we will see. But actually, yes, I could see the face of Ronan because of this. Actually, they were just tax planners, and they had around, like in Dubai with this pharmaceutical company, there were around only 10 or 20 workers, and they paid just a solid amount of tax in Cyprus or in Liechtenstein. But for these companies, it is easy to move to another country and to bring some new workers to show some real economic presence. But the small countries will miss this solid amount of tax when this company will move to another country because of that project.
AJ, any on BEPS?
The only thing that I can, I mean, I don't know what kind of, figures the OECD has worked out. I mean, I have no idea. But the only thing that I could, really bring back to that point is, the comment I think made by Aviona. In terms of, he said, in terms of BEPS, you could find more cooperation now happening in, might be the developing countries are more interested now to join into this because, now we are going to be having taxation at the place where the value is created, which never happened till now, right? So, that's I don't know how this is or how far this is going to happen in reality, but that's my take on it.
Ronan, anything to add?
So, look, the jury is out about the effect of BEPS. It's too early to say. BEPS is highly criticized both from the right, from the left. The right for argument that you heard here today a bit, and the left from that it's going to be ineffective. And because it's criticized from everywhere, I begin to suspect that they may be doing something right. What BEPS is about is really the first comprehensive attempt to stem out gaming by corporation. Okay, most of the regulation that has been introduced in the last 15, 20 years, we're really focusing on individual and on secrecy, individual avoiders and secrecy. This is the first attempt, and it's based largely on research. What we have mostly is research, and I think the research is sound, but I think it's only first stage research to understand really these complex entities called firms or corporation. So I read this research and I'm quite impressed, but as I said, I think it's only in the first step. Broadly, what we have seen, I think, I don't know, it's a direct effect of regulation or indirect effect of the deterrence. Deterrence partly because of regulation, partly because of leaks and so on and so forth. What we have seen is, I think, the tax avoidance and evasion has declined, particularly individual in the last few years. And the effects that I see, for example, in countries like Israel, where I'm originally from, or the UK, is that unexpected rise in tax receipts in these two countries and some others. That's what we've seen in the last few years. With the result is, on the one hand, that a country like Israel began to reduce taxation. The UK, effectively, yes, they begin to claim it's the success of austerity program. They claim it's a Brexit benefit. It's not that. It's to do actually with better, higher receipts, tax receipts than expected, and that's I think part effect of the regulation. So the effect is either more services or actually less taxation on the middle classes.
Okay, excellent. Thank you. Okay, we have about 15 minutes left. We'll probably extend it till about 5:10. We still have a few questions. We'll try to wrap up around, I guess, 5:10 Cyprus time. Brexit. Any comments on Brexit and how will that kind of affect these issues that we have been discussing today? AJ, you want to get started with that?
Not really. I mean, I think okay. I just passed over the question to
Sounds good. Csaba?
If I'm not wrong, and if I remember well, when the Brexit was announced, I mean that Great Britain will start to split. That time, Theresa May had an announcement as well that we would like to be a very competitive jurisdiction after the Brexit, which includes tax matters as well. So I don't know what will be the final outcome of this story, but there is a chance that the United Kingdom would like to position itself as not as a tax haven, but you know, a little bit better tax system.
Any predictions?
Which is good for foreign investors and which can attract foreign investors as well.
Yes, I have a prediction. I think Csaba is right. I think part of the vote for Brexit, at least there's a component. There are a certain group of people, particularly the City of London, and that's not the banks. The banks were against, but some of the asset managers and the like. They dreamed of a kind of Britain as a tax haven, as a deregulated Singapore on the Thames. And there's no doubt that they simply made a miscalculation in my view. And my view on that, and I'm very relaxed on Brexit. I'm against Brexit, as you can imagine. I'm a Remainer, but on that score, I'm quite relaxed, and so are my friends in Tax Justice Network. And the reason is quite simple. It's political and not to do with what people thought they voted for. As I said, the world is made out of rule givers and rule takers, and the rule givers at the moment are the three big, large economies. Okay, now the UK, if the UK secedes from the European Union, it will become the second largest rule taker in the world. Okay, the largest is Japan, the second is the UK, I think followed by India, but then India will, okay, among these rule takers. What the rule takers will have to do, Japan does it now, so essentially the UK can either take advantage of competition among the big three, China, United States, and Europe, and may try to position itself in such a way, take advantage and go in the direction the JABA suggests. But I don't think that's going to work. And I think most likely what you'll find both in Japan and the UK, and certainly South Korea, countries of that kind of order of size, they'll have to attach themselves. They'll be in orbit of one of the big three large. And the UK will probably fall in the orbits either of the US or European Union, most probably European Union. And these large economies will force upon UK, coming back to the idea of tax sovereignty, they basically force rules that the UK thinks that they can evade. They will not. So I'm very relaxed about that aspect of Brexit. I think the jurisdiction that was most worried about Brexit were the British tax haven jurisdictions. They understood that as long as Britain is part of the EU, they were protected, they felt protected. But now they're not protected, and we already see the effect.
Right, recently they passed the public registers of beneficial ownership that they have to comply with, right? The overseas territories.
Really, I wasn't so happy with this regulation.
Right, exactly.
Well, it passed. It was very interesting. It was really driven by Margaret Hodges from Labour. It was not a government. It was one of those private MPs amendment that she managed to somehow create. She told us a bit how she did it, but she managed to somehow link with some Tory MPs and pass that against the government. But the government was a bit too embarrassed to say that they are really against it. I mean, of course, they are leading the fight against tax havens. So what's going on here? At the moment, there was a conference last week where all the leaders of those tax havens came to the UK, putting pressure on the governments, and we'll see what come out of it. But yes, I mean,
right.
But that's a unique event.
Okay, I guess this is a good segue into our question on blacklists. How do blacklists influence, I guess, the sovereignty and tax issues of the blacklisted countries? I mean, does a blacklist have any sort of effect? Does a blacklist prove to be effective? I mean, is it actually worth the time of the EU or the OECD to release a blacklist? What sort of effect does it have on those countries listed on there? AJ, you want to get us started there?
Yeah. Again, I mean, linking back to the question of tax and sovereignty, I think, I mean, this is an intrusion into the sovereign nature of any state to blacklist or to because of the economic power that these persons who bring out these blacklists have, probably that's going to hamper the reputation of those nations which are on the blacklist, and probably influence decisions in terms of investment. But again, as I said, I mean, this is again, I mean, to me personally, I mean, from my perspective, I think it's an intrusion into the sovereignty, and this should be vehemently, fought against.
Okay, thank you, Csaba.
Actually, the Emirates was blacklisted by the European.
It was. It has been taken away. It has been taken.
You were removed from this list, but how was how was it in the Emirates? What about the local people? Do they feel anything, or did they feel anything about this? I mean, tax professionals, or at least the Ministry of Finance. So what was the reaction in the Emirates?
I'm not in a position to say what was the reaction, but I mean,
Not the official one, but I guess.
Yeah, I mean, but generally, I mean, they're quite, I mean, bothered with anything that that puts or tarnishes the name of Dubai or the Emirates. So they were very keen to see that they were taken out of the list. So I mean, so in terms of what I said, I mean, there is, because of the publicity that these things get in terms of reputation, I think, I mean, this is the kind of external pressure that can be brought upon a sovereign nation to behave in a particular way that the others won't. Simple, right? And to me, that is at the core of eating into this competition, which should be allowed. I mean, to a certain degree, which nations, I mean, which I think is intrinsically linked to the sovereignty of every nation.
Do you want to hear more?
Ronan?
Yeah.
Well, blacklist is by definition not an intrusion on sovereignty, because it's a list. You know, if one country writes a list or an organization fills in a list, that's not an intrusion on somebody else's sovereignty. Okay, so Ajay, you can write a list tomorrow, and you can say whatever about different countries. You have a right to do so, and basically that's not intrusion on sovereignty. I mean, that's quite ridiculous. So that's not, but it has an implication. Okay, it's a particular tool that is being used. It's a very soft tool that's being used, and coming back to the notion of the spillover that I mentioned in the beginning of the talk, that countries may feel that decision of others may affect them. Now, decision of others may affect you in the case of tax. Decision of others may affect you, for example, in the case of pollution. So one country can nicely put, for example, all its nuclear station on the border or on the sea of another country. Then the other country may not be happy and may blacklist it and claim something. These are very soft tools. These tools, however, can be useful for two purposes, and that's one, reputational in the sense that many, particularly large companies and or even individuals, don't want to be associated with countries that are recognized as supporting money launderers or tax evaders. Okay, why should I flag to my own Inland Revenue that I'm doing this? You know, it's a reputational aspect, and that's what changed the advantage of a blacklist, and that's again, Ajay, against your notion of intrusion of sovereignty, is that the whole purpose of the list is to be removed from the list. They create the list so you will be removed. That means it's up to you to decide how to react to it. Namely, you are the sovereign. The second important implication of blacklist. Now, there are a lot of blacklists around. Okay, you mentioned only two. There's a very unsuccessful one, the European one, which will change, and there was a very unsuccessful one, the OECD one, which was also changed. There are two of them, but there are other blacklists which are more significant. Many countries maintain their own list of countries that they consider to be tax havens. And that means that either countries or even states within the United States, that means that they will treat investment from those jurisdictions with extra care. And they announce it, okay? They will either demand more scrutiny, more due diligence, or I don't know about prevention of investment for those jurisdictions, but they will certainly increase the cost to make sure, because they don't feel comfortable with those jurisdictions. And it's the principle he works on the flag of convenience. As you know, the largest shipping nation in the world is Panama and Liberia. And most Liberian fleet never saw Liberia in their lifetime. They never visited Panama. The problem with those is that there were a few oil spills, there were labor disputes on ships from Liberia and Panama. Because these countries don't impose strict regulation. So one of the response, for example, of the European Union, United States, was to say you can fly any flag you wish, but if you come to our territories, then you have to comply with our labor rules, environmental rules, safety rules, and so on and so forth. And in fact, these countries will normally send inspectors 12 miles before they allow the ships to. That's the same principle of the blacklists. You can do whatever you want, okay? But if you want to invest in our countries, we have to feel comfortable with your investment, and we will impose that. So I'm in favor of that.
Thank you, Ron. Okay.
I think sorry, just
go ahead, Charles.
Regarding this, that the main concern of a lot of tax professionals was the following regarding this blacklist. why the US isn't on this list because of Nevada, Delaware, and similar states of America, and there were some other tax havens which were not on the list.
Yeah, the Netherlands, which is the biggest in Europe, Ireland, and so on and so forth. So that's very serious criticism, and I think rightly so. The serious criticism is that organizations set up the blacklist themselves internally divided, or are rife by politics. So, for example, the OECD finds it very difficult, although if you talk individually to people, they know very well the Netherlands is a huge tax haven. They also suspect the UK is, and certainly Luxembourg. Okay, but they have difficulties, and that's a correct criticism. The correct criticism is that these bodies are subject to various pressures. At the list that the European Union came up with was simply ridiculous. Had nothing to do with anything remotely linked to reality. Okay, it's only the grey list that began to be interesting, and that's to do with internal politics. And I think on that, Java, I completely agree with you.
Yes, and how can I harm the reputation of other countries if I cannot list my own member states who are tax havens?
I didn't think about it. I haven't seen cases in which some country found itself on the lists because a group of country or alliance was powerful states managed to put it on the list for political reasons. That I haven't. Most countries have managed to remove themselves, like, for example, Gulf states. And I think Qatar was removed from the European list on the last day. So the list I got the day before had Qatar on it. Somehow they managed to remove themselves on the last day. I don't know how. I don't know how much it cost, let's put it that way. But what you're suggesting is a possibility, but I've never heard of that.
Okay, excellent. We have time for one last question. I'll use this as kind of our concluding remark. Basically, we go back to this idea of balance. I mean, where is the balance? What is the point of equilibrium when it comes to maintaining that sovereignty to decide what you want with tax, and at the same time falling in line with what is best for, let's say, the global economy and whatnot? Where is that equilibrium? What are your suggestions? What are your thoughts on that? Let's start with AJ. Some concluding remarks?
I still think, there is, that it's too early to decide on something as an equilibrium, because simply because from a outsider perspective, I think, there's still much of the investments are held.
We're losing you, AJ. We can't hear you. Sorry. AJ? We can't hear you. Can you hear him? Can you?
No.
We don't hear AJ. I don't hear him.
Yeah, we're losing you. AJ, we're losing you.
I guess he cannot hear you.
But the point is well taken.
Let's go ahead, Shava, with some closing remarks.
So actually, we always need to check the tools. For example, if we check this blacklisting method as a tool to influence some other countries or to enforce other countries to change their tax policy or to change their tax system. As I told you before, I don't agree with this kind of method if I don't have sufficient reasoning against other countries and to harm the reputation of other countries, because we have internal problems as well, and it is pretty easy to blacklist other countries and to say that they are tax havens. And next to this, we have tax havens internally as well. I think this is not a proper way to influence other countries. I wouldn't say that nowadays we can see the big players which to enforce other countries to follow their tax policies, but there were some examples as well for enforcement as well. But you know, it depends on the level. For example, the US managed to introduce FATCA together with the 30% withholding tax. Because if you will not follow our rules, you will need to pay. I think this is pretty close to the category of enforcement, because you do not have any other choice. Because you need to follow the rules or you need to pay. So let's play according to my terms, which is pretty close to the enforcement. But I think we cannot go far from tax policy of different countries, and the tax policy should naturally cover the cases when you want to influence some other countries. But in most of the cases, as we could see in the past, these countries are, let's say, selfish, and sometimes they would like to change the tax policy of other countries to be protected, and it can be advantageous for that countries which are trying to enforce other countries or to influence other countries to follow their tax policy, and they do not care what will happen in that country. So it is hard to find a proper balance between, let's say, enforcing and influencing other countries, and to where start the category when we will intrude into the tax system of other countries. But in the past we saw many cases, and I think if there is no bilateral communication between the parties, we are pretty close to the category of enforcement. But if you have the chance to make your comments, and if you have the chance to get off from the blacklist or something like this, this is closer to influence other countries. So, and I prefer influencing other countries than to enforce other countries.
Thank you, Csaba. Ronan, some final remarks, and then I'll actually go back to AJ since we couldn't hear him earlier.
Okay. My point is more theoretical or in principle than actually giving a precise menu of empirical answers of what to do. So I start from a position that in principle countries should have the right to decide on the suitable taxation that's suitable for their purposes. It's not that I'm not skeptical of the ability of most governments that I came across to actually come up with a good menu, but I think in principle that's the principle of self-determination, and that's the principle of sovereignty, and I think I've nothing against it. The problem that we have with countries that we call tax havens is that, of course, they treat non-residents differently to residents. Now, traditionally, historically, countries treated their residents better than non-residents. And there was a lot of movement within the international kind of system to create kind of equity. You treat the foreigners who come to you, whether they are businesses or individuals, you can equally, okay? And that was successful. But we are talking about countries here who are really differentiating between resident and non-resident, and are giving various various tax holidays to non-residents, primarily with the view that they're not turning up. So people talk about Switzerland as a tax haven. It is a tax haven, but not to the Swiss. In Switzerland, you pay heavy taxation. It's as long as they are not Swiss. The same with Jersey. The same with many of those. These are tax havens, or Luxembourg. These are tax havens harder. So the principle is, that's a second principle, is to try to find a series of regulations that ensure that non-residents are not given priority over residents in the matter of taxation. And because if they don't, and if countries, then I think we have a better chance that countries will set up their own internal taxation taxation, and developmental rules in a way that actually suitable to them.
Okay, thank you, Ronan. AJ, since now we can hear you, can we hear you?
Yeah, I mean, as I was saying, I mean, I'll just pick up on the comment which, I mean, Ronan just finished, and then, and as I said, I mean, you were saying that what is the kind of balance that you could have? I mean, just to say, I mean, what is the I mean, I don't understand in terms of a sovereign. I mean, if I'm not thinking globally, if I'm not getting the return back from investing for a global system, why should I even think that I can't give? It's my sovereign right to decide to give whatever preferences I want, to lead the way I want. So as long as the system is not just, is dysfunctional, I mean, I don't think that we would find a balance where, I mean, to take care of the interests of each other, right? So just to say, as I was saying earlier, I think the competition which we are experiencing now should still continue, because this acts as a tool for diverting investments to places where this wouldn't have happened initially, for whatever reasons it might be, right? So that is actually enhancing the sovereignty of many who do not have it in the first instance.
Okay. Thank you very much, gentlemen. We have reached our final time. We went a bit overboard, but the discussion was very lively and engaging and controversial at points, but I think all of our members will truly enjoy this. So to get some admin issues out of the way, we have recorded this webinar. We will have the audio recording available for you probably early next week. We will also have a full transcript. We will send those out to everyone via email, social media, etc. We'll share with our panelists too. If you have any follow-up questions, I just got an onslaught of questions in the last minute, so unfortunately we couldn't get to those. But if you have any questions, make sure to post them on taxlinked.net on a forum dedicated to this webinar, and I'll make sure to have the panelists answer those for you. So without further ado, I wanted to thank AJ, Chaba, and Ronan for this very enlightening discussion, and hope we can do this again sometime in the near future.
Thank you, Matthew. Thank you, Chaba. Thank you, Ronan. I mean,
thank you very much, and have a good evening.
Bye-bye.
We can go watch the World Cup now.
Thanks.
Good idea.
Bye-bye.
Bye. Thank you.